Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. All right, in today's show, we're looking at the places, the locations, cities, major metros gaining and losing the most residents, but more importantly, what happened to home values during that same period. The population numbers all coming from the U.S. Census Bureau's Vintage 2025 estimates. And we're looking from July 1st, 2024 through July 1st, 2025. And we're trying to correlate what's the difference. If residents move in much more than they're moving out in a location, well, shouldn't that mean home value should be going up along with it? I'm going to look at the 5 biggest metro gainers, and I'm going to look at the 5 biggest metro losers. And actually, if you check out Instagram at the Salib Group, you can see the full list where I show the top 10 in both categories. For the show, we're going to cover 5 just due to limitations in time. And here you go. The 5 biggest metro gainers were Houston, number 1, Dallas, Fort Worth, number 2, Atlanta, number 3, Phoenix, 4, and Charlotte, number 5. Now, when we look from July 2024 to July 2025 home values, sale price change, we're using Zillow's home value index, and we're looking at local realtor MLS data. Just so you know where we're getting this from. The gaining side is based on metro areas, and as well as the losing side, we are looking at some counties. So we had to correlate here. Okay, what's the major metro area in that county? So a little bit of research there. But here we go. Top 5, as I mentioned. Houston, number 1, they gained 126,000 residents in that time period from that year of July to July 24 to 25. Dallas, Fort Worth, number 2, 123,000. Atlanta, 61,000. And this means more folks moved in than moved out, right? So we gained in population in these metros. Phoenix, number 4, 59,000. And Charlotte, 54,000. I'm rounding these numbers up or down. The top 5 losing. Okay, how many people left, right? So we're looking at, hey, who came in, who came out? What's the difference? Well, Los Angeles County was the worst at 54,000. Pinellas County, Tampa Bay, number 2 at 11, almost 12,000. Miami-Dade County, 10,000. Queens, New York at number 4 with almost 9,000 residents leaving. And Orange County, California, rounding out the top 5. About 8,500 losing. All right, so what happened to home values? That's what we're trying to correlate, right? Because this should be obvious. Is it? Is it obvious? Well, looking at number 1, Houston, okay, that was number 1. Greatest population increase, Houston. But home values actually dropped in Houston in that same period by 3%. So what gives? Well, you got huge population growth in Houston, but it didn't create higher prices. Why? Because inventory expanded dramatically in Houston, and this is a great example. Demand is growing, but supply is growing even faster. And Dallas at number 2, same story. Got more than 123,000 new residents, yet home values fell. Population growth helped demand, but there's too much construction going on and affordability pressures outweighed it. How about Atlanta? Atlanta home values dropped 3% despite the increase. Now, migration, yeah, it's helping, but listen, it's not enough to provide the demand needed, right, to create that buyer's market, as again, you got not enough demand to deal with all that supply. How about Phoenix? Phoenix, again, home values dropped 3.5% year over year from July 24 to 25. And you got a market in Phoenix that's continuing to adjust from a post-pandemic boom. Zillow actually identifies Phoenix as one of the major metros experiencing declining values as supply improved. That's directly from Zillow, folks. So again, it's a story of another huge migration winner, but builders added plenty of supply and it actually causes prices to decline. Too much supply. Now, the final one here on the list of 5 is Charlotte. Charlotte gaining 54,000 residents. And Charlotte is the outlier compared to the first 4 I mentioned, where home values actually increased about 2%. Now, Charlotte's MLS figures showed the median sales price reaching about $408,000. That's up nearly 2% from July of 2024 through 25. The story with Charlotte is, it's the one in the group where strong population growth is happening, and it's actually bringing in some appreciation. They're not caught up in Charlotte. They're getting a wave of new residents, waves of new businesses and corporations moving in there too, and that's what you see. All right, let's dig into the losers. Los Angeles County was the worst, but home values were roughly flat to slightly higher during this period. So you got large population decline, but LA remained pretty expensive because housing supply remained constrained. Actually, Zillow mentions that there's a major housing shortage in Los Angeles County, and they cite the Wall Street Journal. Now, this is the opposite of Houston, right? People leaving, yet prices holding up pretty well there. Now, Tampa Bay, Florida, that's a different story. Population coming down, and Tampa home values are coming down about 6%. And that's one of the largest home value declines we're seeing among the 50 biggest metros in this time period. Population loss, declining home values, that went in the same direction. And you got some seriously rising inventory, higher insurance costs, and there's real affordability pressure in the Tampa metro area. One thing I want to point out about Tampa and the next one on this list, Miami-Dade County. Now, also, there's a small population loss of about 10,000 in Miami-Dade County, and home values in the Miami metro area in that same period dropped 4.6%. But Miami, like Tampa, population weakness and more inventory, of course, caused values to decline. But I want to point out 2 things. There are markets in both Miami-Dade County and Tampa where you have individual luxury neighborhoods, and they are behaving quite differently than other areas. And you have home values both. There's an interesting thing going on there. If you're priced anywhere from $300,000 to $500,000 for a home, you tend to go quickly and pretty much at market value. If you're in the luxury market, well over, let's call it 1.5 to 2.5 or much higher, right? Also, things are moving quickly. But if you're priced anywhere in between, everything's sitting, right? So affordability pressures, I think, for middle income folks are part of the problem. High interest rates are definitely part of the problem there. But you do have to dig into the weeds a little bit because there's parts of both those counties that are doing just fine. All right, Queens, New York. Again, population drop. That's number 4. But guess what? Home values remained pretty firm. That New York market, it's again limited. It's limited in supply. Actually, New York was named one of Zillow's strongest sellers markets during that period, despite losing residents. And finally, Orange County, California, guess what? Still positive on home values, despite losing some residents, about 8,500. Actually, local market data around that mid-2025 showed prices still up 2 to 5% above the prior year. And another example, population decline did not automatically translate into declining home values despite supply having been, and I should say, supply remaining extremely limited. So look at this, Houston, Dallas, Atlanta, Phoenix, all prices lower, even though higher migration in folks, except for Charlotte, where prices did go up. And look at this, population loss in LA, Orange County, Queens. Those 3 places values held up, if not went up. However, Tampa, Miami values fell. But again, as I mentioned in Tampa and Miami, dig into the weeds. And you'll find this true in a lot of other places too, where there's some parts of the market, some neighborhoods that are holding up better than others. And you should talk to a local realtor, real estate agent, broker to get a better picture of what's really going on. Dig into the weeds a little bit, what's going on under the hood. Population matters. But over a 1-year period, housing supply, affordability, interest rates can be far more powerful than population growth alone. That's what this is teaching us. when you listen to these statistics, don't just look at the surface. Try to figure out what's actually going on. How many homes are being built, right? We've talked about this before, especially in Texas, Dallas, Houston, or other episodes where I mentioned, there's a lot of construction going on, and so if we keep building, we can actually overbuild. And I've seen that before, especially in Miami. I've seen it in the condo market as well. So the relationship between the demand and available supply is what ultimately determines pricing power, not just population growth or declines. That's the big lesson from today's show, and hopefully you learned that and got something out of it. Thanks for listening. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at The Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time.